Hi, my name's Fred Arnold, and I'm a mortgage professional with American Family Funding, a division of American Pacific Mortgage Company. And I'm joined by Rona Jukes. Rona Jukes is a mortgage professional here in Southern California with American Family Funding. And I want to talk to you, Rona, briefly about the different opportunities for people to buy a home, because right now houses are flying off the shelf and the market is hot.
It's amazing what opportunities are out there for homeowners, people who are renting today that may not be aware of it. One of the most popular programs is the FHA loan. It's insured by the government. It affords you an opportunity to come in with 3.5% down. That's the minimum.
So let me interrupt you real quick. 3.5% down. So on a $300,000 house, that's $10,500.
Exactly.
Very minimal. Very
minimal and affordable. It also allows you to have that down payment to be a gift from a relative. 100% can be a gift.
All that down payment, 10.5, could be a gift.
Exactly.
Yeah, the gift, the loan that keeps on
that
giving.
Keeps on giving. And we'll go one step further. They'll also allow, if you have a client that might be struggling with income, not quite there to qualify, FHA will allow a co-borrower to come in as a co-signer and assist in qualifying, and here, now they're a homeowner.
You know, I've seen this many times before, and that is, let's say you have a borrower, a son or daughter, for example, that doesn't quite make enough money, but they do make money, and they do have credit, and they do have a job, and they're hardworking, and the parents are going to help them a little bit, and that allows the cosigner.
That enter the cosigner.
Now, one thing we're going to hear about when this goes out and this information goes out is, well, there they go again, lending money to anybody at no money down. No, you do have to have reasonable credit, and you do have to qualify.
Absolutely, absolutely. It just is giving them that extra push just to get them into a comfort level for the underwriter and everyone to approve them.
And I'm going to call that the traditional FHA loan. There's now a 5% down program that's a conventional loan.
Exactly. We have you'll put 5% down. How it differs is with FHA you have an upfront mortgage insurance premium that gets rolled into the loan amount. With a conventional 5% down, there's no upfront. That's savings for you, and the premium is much lower.
So you're saving some money on a monthly basis?
You're saving on a basis, and it affords you the opportunity and options to either pay it monthly, or you can pay it one time up front.
So up front, you could bring a whole bunch of dollars into escrow to close, prepay your mortgage insurance, and then you won't have that?
Exactly, and then you don't have that monthly obligation, which may be giving you more buying power to buy a larger home.
Yeah, a lot of variations of this particular product.
Exactly,
yeah.
Exactly.
What if you want to put less than 20% down, because that's the magical threshold.
Right.
You want to put less than 20% down, but you want to avoid mortgage insurance. You don't want to pay it. I shouldn't have to pay it.
Well, we still have a program that's back and available. It's called our 80-10-10 program. You put 10% down, you carry a second for 10%, hence your loan to value, it's back to 80%. Lowers it so you don't have to pay the mortgage insurance.
So you have a first of 80%.
Right.
You have a second, and you provide the second for the additional 10%.
Yes, we can.
And then you have your down payment.
Exactly. So that puts you back into a better position where you don't have to have that mortgage insurance.
Yeah, well, creative.
Very creative.
Yeah, very thoughtful. Let's talk about, let's say you buy a house that's in disrepair, but it's in disrepair more than normal. Right. For example, let's say the previous owners were renovating a bathroom. Exactly. And it had been torn up, so the house cannot sell conventional or traditional because it's so, if you will, damaged, is not immediately inhabitable.
Right.
What program can you use?
We can use, we have a 203K program through FHA. It could be used for a purchase or even to refinance. You can go ahead and utilize funds up to $35,000 to finish those pieces of, or the construction that you might have started. It's mostly for carpet and appliances and bathroom remodels, things like that. And
a missing stove. Now we're seeing some homes stripped of or vandalized.
Yes. People, you know, are leaving or having to leave, and so they take everything with them, literally. This affords you the opportunity without having to bring up any more money out of your pocket. It gets rolled into your loan, and you pay it out over the 30-year period.
And the one exciting thing about this is you can get a gift of 10%, or on that example of the down payment.
Pay with 3.5%.
And you can borrow more than what you originally buy it for to do the repairs, and you can have something potentially that's worth a lot of money, because that house is going to go below market, because only cash buyers are allowed to buy if you don't have that program.
Exactly.
In most cases.
Exactly.
Yeah.
So it's a great opportunity to get in. Look beyond what you see in that home, because there's maybe a program out there to help you.
Yeah, and dream big.
Bring it up.
Let's talk about the California home. I'm gonna read this because it's a mouthful. California Home Buyers Down Payment Assistance Program. CHDAP is what they call it.
That's right. And this is a program that affords you the opportunity to put 0.5% down.
Again, 0.5% on
0.5% down.
300,000.
Right.
You do the math, is $1,500.
Right. And they will then carry back a silent second for the remaining 3%, and get first-time home buyers into homes. You know, it is geared towards first-time home buyers. It is geared towards, you can do a single-family dwelling, you can do a planned unit development, a condo. The only thing is that they want to make sure that you understand the type of loan that you're getting and about home ownership. So they ask you to go through a counseling session. It's about maybe an hour long.
And very educational.
Very educational, and helps you out.
Yeah, and of course, a lot of requirements and parameters, and they can get that information by calling American Family Funding.
Absolutely. They can call us at 661-284-1150.
Rona Jukes, thank you very much.
Thank you very much.
Appreciate it. Yeah.
Oh, let me just give our website.
Yes, please.
www.affloans.com.
AFFloans.com. Perfect. Well, I hope you enjoyed this little segment on buying a house, especially in this fast-paced market. We'd love you to come in, give you some advice on making that purchase and buying a piece of America and the dream of home ownership. Thank you very much.